Hello, Adam Hewison here with your 1 p.m. update for MarketClub, Tuesday, the 12th of April. Let's take a look at the big markets using MarketClub's trade triangle technology. Massive profit taken in metals based on Goldman Sachs call on Monday to take profits on some of their commodity positions. There's the same thing in crude oil, which pulled back over 3%. The dollar index is still in a very precarious position with a minus 90 reading with our trade triangles. Our inflation indicator just eased back for now, and stocks got off their waffle and are now on the defensive. We've been talking about that all week about the stock market and how it's waffling and wasn't going down. But let's take a look at the big markets everyone wants to look at. We're going to be looking at gold first of all. Actually, let's look at silver first of all, because that's really the stronger of the metals. And as you know, we've been advocating a long silver, short gold position, which actually worked out well, even on a down market, which I found quite interesting. But let's take a look at where we are right now. The silver market is showing a 75 right here, minus 75. If you're a short-term trader, you should be out of silver right now. We got in here at 37.39 with our trade triangles, our daily trade triangles. This is for short-term trading. And we're out today at 39.76. So that's about a couple of dollar profit on the position in a pretty short time period. Pretty happy about that. This market looks like it could be more on the defensive, and let's see what our talking chart technology has to say about this market.
Our patented technology has given this chart a score of plus 75, which indicates that this market may be reaching some near-term weakness. Keep an eye on the chart analysis score to possibly hit a plus or minus 55. Which may indicate a move in. Keep an eye on the chart analysis score to possibly hit a plus or minus 55, which may indicate a move into a trading range. And remember, always practice proper money management techniques.
Okay, you heard it directly from our talking chart technology. Now here's the thing with this market. It's still in a very positive uptrend. Our monthly trade triangles are positive, and our weekly trade triangles are positive. Now, having said that, the gold is the same way, still very positive, but we may see some further downside realignment here. It depends on where we close in silver today, which is still trading. If we close higher on the day and there's no follow through from Monday's collapse, then I think we may see some more building and then a move back up later in the week and next week. We are still bullish on this market, looking for $50 an ounce in silver. So let's take a look at our next market. Go back to our portfolio manager. If you've seen us use this portfolio manager, you know how cool it is. And you have this is our market update for the 12th of April. So we have all our markets that we're looking at. We've looked at silver. Let's take a look at crude oil, because that's really took a hit. And we're currently trading at 106.20, down 3.38%. Even the ETF, which we talked about, is down 2.68%. And we're in a 55 rating in crude oil. This is so let's just click on that chart and take a look. You can see how we just had really two massive down days in this market. However, we may be getting close to an area that may be support. Longer term, we're still bullish. We have a monthly trade triangle from 86.21 and a weekly from 95.08. We're currently trading at 106.20. So I can take my Fibonacci tool, which is very easy to use, take it from the high here, drag it down to our next level, and we're very close to seeing, or actually just going beyond the 61.8% Fibonacci retracement level. Now, depending where we close today, when we close out the market, because we're still trading, we may see this market come back. So not bearish. This market should have support right around where resistance was, right around here. And I think we'll have to watch this market for the next few days. It needs to regroup if it's going to go higher later on. We still have a 120 target zone for this market. So let me take this off the screen and let's look at our next market. And our next market is going to be, let's take a look at the Reuters Jefferies CRB index, which is down 1.88% today. And that still is very, very positive in terms of the trend is clearly up. And we're looking at this market actually coming back and making new highs. So that's really what we're looking at for the trend. So here we had a big profit-taking day. Again, we can do our Fibonacci tool and go from the highs here Oops. Simple to do. Just grab, click on the top, and pull it down. And as you can see, we're right in that 61.8% zone. 358.31 was the low. Excuse me, that's the Fibonacci number. We're trading at 359.23, so we've actually hit that. So we may see some further, I would expect to see some further backing and filling in this market before it resumes its upward trend. But again, I think the trend is still very much positive based on our weekly and monthly trade triangles. So let's go back to our portfolio. We're looking at the big markets now. We're not going to be individual stocks or things like that, but just generally the big market. And let's take a look at a market that's not doing well. And unfortunately, that is the dollar. We're going to look at the US dollar index, minus 90. It's down today. Not a good performance, not at all. And we talked about this market going down to 74. You can see the action is not good, and I think you can just take a look at this market and tell it's just not trending at all. So we've got this kind of downward trend. Oops, let me take that off the screen. Hang on one second. Let me just take this Fibonacci off and take this off here. It's easy to do with MarketClub. You have all these very simple tools to use and the very, very powerful tools for you to utilize in your trading and looking where retracements are and so forth. But again, we're seeing this market, this is a clear downtrend. I mean, just clearly downtrend. We had a big down day. We've seen a couple of sideways and now another big down day. We're 74.83. Looks like this market can still go lower. We have a 74 target on the dollar index. So again, nothing to change. All of our indicators monthly, weekly, daily, minus 90. That's a downtrend. Not good. We may see some rallies, but I think for the most part, we're going to see the dollar continue to erode. Probably a lot's going to depend on what the president has to say on Wednesday, but the markets usually tell you what they want to do before that. So go with the market. You're much better off. So let's clear everything off the screen. And let's go back to our portfolio manager. And let's look at what we have been talking about all week. And of course, that's the S&P 500 cash. It went to a plus 75. Let's look at the chart there. And here you are. We were looking at this market. These are daily trade triangles, not to be confused with weekly. And I'm going to take the daily off. It's easy to just click here, and they're off. So our weekly kicked in right here at 1327. The market's 1313. Maybe changing very soon, but the reality is this market, we thought it was going to trade back to the area we showed you earlier on, which is around 1300. We thought it would pull back there before we see some sort of two-way action. But we could also, again, take our Fibonacci tool. And this is where the Fibonacci tool really shines in terms of showing you where and how far our market should go down. So we click on the very high, which you had several highs, the resistance level we talked about, 1340, and just drag it down to the lows here. Very clear-cut high and low. So 1305 is a 38% retracement. 50% takes you just below 1300 to 1294, and a 61% retracement is 1283. So I would look for certainly the 1300 level to be hit, maybe even 1294, and possibly even this 1283 level. Lots going on, but the trend right now is certainly on the defensive for this market. We're in a 75 mode, meaning the longer term trend is still good. However, weakness is the name of the game short term. Hey, this is Adam Hewison with your 1 o'clock update for the April 12th, 2011. Thanks for stopping by. Every success. We'll be here tomorrow, so tune in.